All right, a new red flag in the housing market, mortgage delinquencies. It's a sign of bigger trouble ahead. That's the question this morning. Diana Olick joins us right now with more. Diana, good morning.
Good morning, Becky. Yeah, mortgage delinquencies are still historically low because home values have gone up so much in the last 5 years. But early this year, they began to rise just on FHA loans, which are generally used by lower income borrowers. But now we're seeing something new. In May, a significant jump in the early stage category of all delinquencies. That's 30 to 59 days past due, and according to a new report from VantageScore. They rose from 0.92% in April to 1.03% in May. Not huge, again, but an early indication of financial stress among borrowers. What's more concerning, though, is that these delinquencies were led by borrowers in the near prime, prime, and super prime segments. That is, the least risky borrowers with the highest credit scores.
Hi, it's Mike. Welcome back to the channel. In today's video, we're going to talk about something that's starting to hit the news again, and that's foreclosures. So do you think the foreclosures are going to be a big issue moving forward? Let us know down below in the comments on what you think. We are seeing a lot of people that bought in the last couple years when the market was peaking out around 2021, 22. They may be upside down right now. Another change that we're seeing is there's more foreclosures by people with high credit ratings. In other words, it's not all the government-backed loans that are going into foreclosure. We're seeing notices of default go out for prime buyers, people with really good credit scores. So we're going to take a look at some of the national news on housing, and stick around till later in the video if you'd like to hear about the foreclosures happening in the Phoenix market right now. So this first chart right here is a redfin chart. It's showing monthly buyers versus monthly sellers. And the first thing that we want to talk about here is we're at a standstill right now between buyers and sellers. The buyers seem to be on the sidelines right now. We have high interest rates. We have an uncertain economic period going on right now. And with AI coming in, a lot of jobs, including high-paying jobs, are probably at risk right now. If you look at this chart down here in the orange, you can see the sellers. You can see the spread between the sellers and the buyers. And if you look at this chart, it goes back to 2013. The buyers right now, the amount of people looking to buy a home is almost as low as it was at the bottom of the pandemic. You can see back then it was 1,373,639 buyers. We have 1,413,331. So we're really seeing a slowdown and a difference between buyers and sellers. In our last video, we talked about how a lot of buyers are holding back and sellers are having to take their property back off the market. The only thing holding this market up right now is lack of inventory, which we are still lacking. If you take a look at this chart right here, it shows existing home sales. Again, almost as low as we were during the pandemic. If you look up top here, back in 2020 and 2021, this is where sellers seem to be wanting to price their home right now. This is the area where they feel they maxed out their value and they're a little late to the market, trying to put their property on the market for the prices. They remember looking at their Zillow estimate or Z estimate or Zestimate back in 2020, 2021. They saw what their neighbor's home sold for, and those are the prices that they're trying to get right now. If you take a look at this article on PR Newswire, you can see that U.S. foreclosure activity increased quarterly in the first quarter of 2025. It says right here, following 3 consecutive quarters of decline, foreclosure activity picked up in the first quarter of 2025 with notable growth in both starts and completions. Now remember, the foreclosure process starts with a notification first. So when the notifications go out, that's when it's recorded that there is a foreclosure pending on a property. Now there's a number of things that can happen in the meantime, and not all foreclosures go to the courthouse steps. Arizona is a deed of trust state. It's a non-judicial foreclosure state, meaning it doesn't have to go to court to go through the foreclosure process, where other states have to go to court. Those foreclosures take a lot longer. In Arizona, it could happen as quickly as 90 days. So there were a lot of foreclosure moratoriums put on years ago from the pandemic. There's always been moratoriums put on during natural disasters and other things. These are primarily federally backed loans, FHA loans. And there was a recent moratorium that ended this year. So we are going to see more of those loans going into default. Now, they have been adding on to the loan period, say from 30 years to 40 years, and they've had times where they completely delayed payments. Now, a lot of banks do not want to deal with having foreclosures back on their books. And the other thing is a lot of homes have equity. So you wouldn't think we'd be getting as many foreclosures right now. Now, something we've been having a lot of lately is the natural disasters, and with the FHA-backed loans and probably a lot of bank loans right now, they are doing moratoriums in areas where they've had natural disasters. For an example, California, that had the wildfire disasters, they are doing mortgage moratoriums. You can see in this document dated March 6, 2025, all FHA approved mortgages, all direct endorsement underwriters, all FHA roster appraisees. This is in California. This is the U.S. Department of Housing and Urban Development, specifically based on California. You can see it says extension of the foreclosure moratorium in connection with the presidentially declared major disaster area in Los Angeles County. Now, this can happen in the other areas where they've had hurricanes, wildfires, and other things. So now if we take a look at the Phoenix market, you can see this is the Cromford report talking about foreclosures pending. Now, I just went back from 2023 to 2025. Up here in the pink, you can see this is 2025. Right now, there's 1,391. The lowest point in the year was 1,100. If we go back into 2024, you can see right here, there was 1,206. It started out the year even lower. And then if we go back to 2023, you can see right here, probably there's 787 right there in 2023. So you can see as time is going forward, we're going to see more foreclosure notices. Now, the thing that's interesting about foreclosures is, again, they don't all happen. They have to send out the notices to start the process, but they don't always go to the courthouse steps. They don't always go into foreclosure, and many banks will try to work things out with people. They're either going to add another 10 years onto the mortgage, could do a short sale. There's a number of ways they can try to help the people. But the things that are really concerning are the people that have been under the moratoriums for quite a while. Will those properties now come to the market? Now, the way the market is with supply right now, we could absorb all the foreclosures that would come to the market. And actually, the fact that they put those moratoriums on for so long has affected the market in a way that it's not a normal market. In other words, normal foreclosures aren't happening like they have in the past. I could go back into 2010 right here and add that to the chart, and you could see right here, it started out the year with 50,000 notices of foreclosures and ended the year with 41,000. So we're nowhere near that. When you look at the chart, it's almost not even on the chart. If we compare 2025, you don't even see it. See down here at the bottom of the chart. I mean, there's no comparison. We're under 5,000 here, and if you go up here, we're up in the 50,000 range. So you can see the huge gap in here. Now, right now in the Phoenix market, if I search properties that are listed as bank-owned, pre-foreclosure properties, there's 292 that actually made it onto the MLS. Now, there's a number of reasons why, but for the most part, they're either pre-foreclosure and the people are notifying the public that they're trying to sell them as a foreclosure. There may be some in the MLS that are not even sharing the fact that they're in foreclosure, but there are investors that watch the foreclosure records. They watch when the letters are sent out by the county, and then they will contact the people to find out if they'd be interested in selling their property. And then some of these people would consider a possible short sale, meaning they would go to the bank with an offer from a buyer, and they would ask for them to take less than what the loan amount is for the property. This is a long process. I recommend getting an attorney to handle this. But short sales were really big quite a few years ago, and they may come up again. So as of right now, foreclosures are not a huge part of the market. They're very small. And a part of that is the fact that a lot of people have lower mortgage rates and they have equity in their properties. But we are seeing the trend toward higher quality buyers going into foreclosures or getting notices. A lot of people learned back in the 2008 crash when the banking crisis happened to just give back their property to the bank, deal with bad credit for a few years, and then try to build their way back. Thanks for watching today. Take a look at some of our other videos. Have a great day.